Fortunately for us, what happens in Buenos Aires does not stay in Buenos Aires. And something did happen. From Stuart Peterson, this is the Market 360 Weekly Grain Update for the week of December 3rd, 2018. My name is Chad Goodwill, and today I'm joined by Eric Franzen, the lead market advisor on the grain team in Market 360. Hey, Eric, thanks so much for getting together with us again this week. It's good to see you.
You bet, Chad. You too. Good to be here.
Good. So, pretty major headline this week. It sounds like the meeting between President Donald Trump and President Xi Jinping happened. And not only did it happen, that there were some reasonably substantial understandings that they each walked away with, at least on the surface at this point. A couple of the things that I noted were a 90-day reprieve on the other tariffs that they were having discussions around implementing, and the increases on the tariffs that we talked about, and then something that they referred to as very substantial purchases in agriculture and a couple other areas. So what can you tell us? What do we know at this point? And did the commodities markets react strongly toward this news?
Sure. Yeah, so I guess my take on it was based on the talks going into the weekend, the reaction, or I guess what came out of the meeting between President Trump and President Xi. We got about the best news that we could have expected based on those expectations late last week. So essentially what they said was that we have agreed to not impose any additional tariffs as of January 1st, as what we were planning on doing at the beginning of the week and what President Trump had, reiterated.
Yeah.
The other thing that they said is there's a 90-day period where they're going to, I believe, attempt to come up with a resolution. And the only thing we got out of China is that they have agreed to buy a very substantial amount of ag, energy, industrial, and other commodities. So good news. The markets did react positively to the news. But the bottom line is the agreement really is very vague, and it's going to take, in my mind, it's going to take a couple of months to see how much exports ramp up. If they actually do.
Okay. Well, you know what? It's good news, and it has been a very long time since, especially soybeans, have had anything to get excited about. So I'm glad to hear this. And that being the case, why don't we start with soybeans this week? What have we seen going on with them in the markets this last week?
So, exports, we had inspections out today. Export inspections came in at 1.041 million metric ton. That was about in the middle of the range of expectations, a little bit lower from last week.
Okay.
Export sales last week, I would say we're at the low end of expectations, so that was a bit disappointing. Year to date, soybean export sales are running about 32% behind a year ago. So, substantially behind, like we had talked about. It's very visible looking at those the export charts. Export inspections are running about 43% behind a year ago. So again, we have a lot of catching up to do, which hopefully this agreement will, we'll start to see some evidence that we're starting to get caught up in the coming weeks.
Yeah. What sort of price activity have we seen then?
Yeah, so here quickly, just a chart of the export commitments for soybeans. So, even going back a couple of weeks ago, we have seen a slight uptick in the pace of export sales. But again, we need to see something pretty dramatic over the next couple of months to help us get caught up. And I guess my take on the 90-day window, the one thing that does, if you want to make a bearish argument, to me, this just gives China an opportunity to cover their needs for the next couple of months. And after that, South American harvest is going to be in full swing. And they really don't need us anymore after that. So if you want to put a bearish spin on it, that would be my take.
Okay. Well, it's good to look in both directions, right?
Yeah, definitely. So price-wise for soybeans, we had a pretty good reaction here overnight. At one point, we were up about 27 cents on the January contract, the front month contract.
Okay.
So we did gap higher last night. We did trade above the previous high, and this is a front month continuous chart. So in my mind, this 906 level is critical. That was our high from back in July on the front month continuous chart.
Okay.
Last night when the bean market opened higher, I guess my thought was, good reaction. It was pretty much in line with what I'd say the more bullish expectations were. There was some talk last week that we could see a 50-cent move up or down, last night and today. So we didn't get quite that big of a move, but still a pretty big move. On the face of it, today's price action looks pretty bearish to me. Now it's only one day, but the fact that we closed, almost 20 cents off the high, we only closed 11 cents higher on that January contract. So all in all, a pretty disappointing close on the day. We do have a gap to fill on the chart now from gapping open, higher Sunday night. So we could go back and fill this gap this week. It looks like that's what the market's going to do. And in my mind, we need to see a weekly close above 906 to break out of this range, and expect more, I guess, longer term upside price movement.
Okay. So switching over to corn then, I know that the conversations around China don't impact corn as much, but one of the things that I heard people mentioning today was the fact that if we see some positive response in soybeans around this, that some of the planting intentions might switch away from corn and back into soybeans, which could help strengthen corn prices a little bit. What sort of reaction did you see in corn this week, and especially in response to what we heard coming out of South America?
Yeah, so the reaction on the part of the corn market to the news yesterday was, I would consider that positive. Very similar looking to what the soybean market did, gapped open higher last night, sold off during the day, closed towards the bottom end of the range, not quite as negative looking as the soybean price action. Last week, the market sold off pretty hard into early in the week, and then we did bounce towards the end of the week. Last week, I think we had some selling pressure. I know we had some selling pressure because of first notice day for the December contracts. That was, I would say, kind of verified looking at the commercial positioning last week. The commercials added about 20,000 contracts, or they sold about 20,000 contracts. So most likely that was farmer selling due to grain having to be either sold or basis contracts rolled out to March ahead of first notice day. Funds were fairly quiet. They were net buyers of about 9,000 contracts, so not real active.
Okay.
So exports for corn, inspections today, about 1.035 million metric ton. That was at the upper end of the range again, a bit down from last week, but still good. Export sales last week were above the upper end of the range at 1.266 million metric ton, and that was up from 882,000 the previous week.
Okay. So where do exports stand then relative to previous years?
Yeah, so year to date, exports for corn look really strong. Export sales are running about 16% of a year ago. Shipments are up 82% from a year ago. Here's a chart of export sales. So, we had a couple of slow weeks here. This would have been about a month ago, but we have seen a nice uptick again in the pace of export sales for corn.
Excellent. Okay. And then corn price action. What did we see happen, especially today?
Sure. So price action, this was our price action from today. So we gapped open higher last night. So if we go back roughly, this is about 3 weeks ago, to our supply and demand report, we had a retest of the previous high. So we do have a double top on the, this would be a continuous chart for corn. Mm-hmm. So we've got a double top around 379. we had a pretty substantial correction. We actually retraced a little bit more than 50% of this price range from this low to this high. So kind of a typical pullback. The red line here is a 40-day moving average. Once we bounced off the 50% retracement level last week, we thought we could bounce back to kind of this mid 360 level looked likely. We got more than that, so we've already retraced about 78% of this price range. So in my mind, what we need to see is kind of like soybeans. Now we've got a gap on the chart to fill down here. That would be filled on a pullback to roughly 367. If we cannot take out this double top and instead pull back and take out this previous low, then we could be looking at a move down into this 340 price range. As long as this low holds, I guess what I'd be looking for, hopefully we can take out this double top here and get a move up into the, let's say, mid to upper 380 level. And then we do have a gap on the chart that would be filled at about 390 3/4. So I would say this would be a realistic objective for the March contract, possibly by the end of this year, early next year.
Okay. So while the news that we've had this week is substantial, right? And we did see some pretty positive responses from this. If I'm hearing you right, we really haven't changed our long-term trend assessment as far as where we continue to pursue in both corn and beans.
Right.
It's more of, hey, we're on a little bit of a heightened alert level.
Yeah, certainly the long-term trend has not changed. If we think back to the soybean chart, again, I think we need to see it close above 906 on the week. Otherwise, with the gap that we had last night, if we pull back and close, especially if we close back below $9 on the week, that's going to look pretty bearish. And then we're still stuck in that same range with a false breakout. So, so that's why, this week is important. And again, we need to see some evidence of, what is that substantial amount of ag commodities that they're going to buy. And even then, 1 or 2 really good weeks of export sales is a drop in the bucket compared to what we need to get caught up to the current USDA target for export sales for soybeans. And on corn, we've got this double top here, so we certainly haven't taken out the previous highs yet, let alone broken out of the range or changed trend. I guess my thought on corn, I think the long-term trend changed probably back in September, October from lower to higher when we weren't able to take out the July lows.
Yeah.
So at this point, this pullback here last week looks like a correction. But again, to confirm that, we need to take out that 379 level.
Right. Yeah. I just think everybody is so eager for some good news.
Right.
Well, you've given us a lot of information and some things to look forward to, at least. So I just want to thank you again for taking the time to get together, and we will see you next week.
You bet, Chad. Always a pleasure.
Thanks. Thank you for joining us for the Market 360 Weekly Grain Update. To access additional resources or learn more about how you may be able to improve your grain marketing, either visit us at stewart-peterson.com or give us a call at 800-334-9779. This is a production of Stewart Peterson Incorporated in beautiful downtown West Bend, Wisconsin.